Hello and good morning. I greet you all as we step into the second week of May. I'll be doing the weekly outlook, what I'm expecting to see, what has happened last week, and what I think would happen going forward. Personally, I have a few Forex pairs and exotics and indices and everything actually that I'm watching this week, so I'll try my best to go through this video as quick as possible, mainly using internal range liquidity and external range liquidity, and hopefully in me doing so, directional bias would be clear for you all. Well, again, I just have to remind you all that this is merely what I'm expecting to see and nothing that's set to stone or anything like that. So starting off with the dollar index, on the weekly time frame, I'm expecting an internal range liquidity to external range liquidity. I know that we have closed twice now outside of this fair value gap, this BC, but I'm expecting it to hold because it's coupled with a mitigation block. Notice how the up close candles were supporting lower prices, up close candle, lower prices, until here when we had the turnaround. Now down close candles are supporting higher prices. What that means is that whatever bullish candle was on the left side of this market maker buy model would now be supporting higher prices on the right side of the market maker model. So this entire area for me is what I'm expecting to be used as support for higher prices. This week we have CPI and PPI, so I'm expecting these buy side liquidity levels here to be cleared at the 106.5 area. Then going through that, we can expect the 107.3, and of course we'll see after that. But going down to the daily time frame, we see basically the exact same setup or similar setup. The series of up close candles will now, to me, I'm expecting to see support higher prices to those relative equal highs and these relative equal highs. We have seen price trade down into discount of this range, measuring from the low there to the high of the range. We have now traded into discount. Discount, by the way, is anything below the 50%, and premium, of course, is anything above. And we can see that we have now disrespected two bullish fair value gaps there. We have bearish fair value gaps. We have a CB there that was disrespected. We have another one over there that was disrespected because we closed above both of them. So now I'm expecting a push up from there, even though we got a displacement here on Thursday to the downside. I'm still expecting it to hold from the higher time frame perspective. So higher prices on DXY. The next one I have on my list that directly follows the directional bias that I'm looking for on the dollar is GBPUSD, being the weaker one of the two compared to EURAUD. So in this case, we see that we got a displacement here from the daily time frame. We have a rejection here during NFP, creating possibly the high of the month, and I'm expecting a continuation to the downside, the first drawn liquidity being this external range liquidity. So in this case, we have a range from the range of the previous week, which was from here, from this high, I believe, to this low. So let's measure this correctly. So this is the previous week's range from the high there, the 0 point to the 1 point, which is the low there. And we can see prices traded into the premium, rejected aggressively as we tapped into this up close candle, using it as an order block. And now I'm expecting us to continue lower without much of expansion to the upside. I'm actually expecting this high to hold, and to be safe, I would rather wait for Monday's candle to finish printing, creating a swing high, and I would like this swing high to hold price for lower prices. Going through this swing low on the dollar index, I'm expecting this BPR to be next. The BPR being the balanced price range, where we have a CB there coupled with a BC on the right side. So we have this balanced price range. I'm expecting this to be the drawn liquidity going into this week, where we have internal range liquidity to external range liquidity. This is my top watch on the dollar index. on anything to do with the dollar, actually, dollar crosses. Next one that's not as high probability as GBPUSD would be USD Swiss. Because I'm expecting higher dollar or higher prices on the dollar index, I would also be expecting higher prices on USD Swiss, for example, because the dollar is the first currency in the pair. What I wanted to pay attention to was the monthly time frame. Even though I'm looking for something that's intra-week based, we can see on the monthly chart that we do have a liquidity sweep that happened down there. We have a fair value gap that has now been created on the monthly. Yes, it is not in discount, but we should also notice that we have a balanced price range right there. If you remember what ICT teaches about balanced price ranges, he says that when price comes and trades back exactly to the high of the previous candle, rejects aggressively, shows us that it's very bullish and did not even create an inefficiency for price to return to the upside. So on the monthly time frame, the only inefficiency that I see is this one right here. So I'm expecting the low of the month to be formed within this fair value gap. So right now I'm expecting us to trade lower into this, then continue higher. But of course, this is a monthly time frame, so let's go down to a weekly or a daily in this case, since we're looking for something that's intra week. In this case, we have relative equal lows residing at those levels down there. We have the sell side there, we have the sell side there, we have the sell side there. So we're just going to call these lows relative equal lows, and we could possibly see price come down into this daily imbalance, this daily BC or bullish fair value gap before trading higher. So this makes it basically what I'm expecting would be internal range liquidity right here, which is this CB, to external range liquidity, which is the sell side liquidity down there, or this relative equal lows. Then as we tap into this imbalance, if we do get the chance to tap into this imbalance, then we could see a higher time frame internal range liquidity to external range liquidity, which is basically from the monthly chart, looking something like this. So daily internal to external, monthly internal to external. That's all I'm looking for on USD Swiss, but as I said, I am prioritizing GBPUSD as opposed to USD Swiss. The next one I have on my watch list is AUDCAD. From here onwards, I'll be talking about crosses, and by cross pairs I mean exotic pairs and commodities and everything else that's not directly correlated to the dollar. So let's start off with AUDCAD. On the weekly chart or time frame, we see that we have now created we actually swept the relative equal highs up there, and we can now expect some sort of internal range liquidity, external to internal, because now on the weekly time frame we have created this fair value gap. The likelihood of us tapping into this fair value gap is high because we have now swept external range liquidity, and this is the closest drawn liquidity, even though it looks far from a weekly perspective. For those that are trading intraday, are likely going to get this fair value gap tagged on Monday or Tuesday, actually probably even Sunday tonight when the markets open. So down here, got a liquidity sweep. We have a possible internal to external. Yet again, I'm only looking for internal to external range liquidity this week, to be honest. And I have a personal model that I can't say I've developed, but that I will be paying attention to this week. For those interested, of course, can just ask me, and I'm going to do my best to describe what I'm going to be focusing on the most. So going down to a daily time frame, we see that price has been consolidating inside of this massive imbalance. The chances of us trading into this down close candle is actually high because it's around the halfway point of this fair value gap. Let's label this appropriately so we can see where the halfway point is. Halfway point is right there. If we come down to the discounted side of it, we have this down close candle. So if price is really dramatic. It could come down into that down close candle before continuing higher, even though I don't think that's going to happen because of how strong AUD is as a currency. And you'd notice this as we go into other pairs. Let's see. Okay, delete that. So I'm expecting price to go deeper into this. I'm not seeing any possible move to play on the daily time frame from external back to internal, but maybe on the hourly, for example, you'll be able to find something. So there we got a liquidity sweep, we got a displacement, the classic 2022 model where we swept the previous day high, and this happened on a Tuesday, so we can see a continuation to the downside. So even though price has not traded down into this, it has rebalanced some of this inefficiency from the hourly perspective. So right now we could see a potential move from this fair value gap to the downside. Just make sure you can find an SMT at the highest to justify the move to the downside. And even though I don't have the time, I can try and pan through NZD-CAD and see if we get something that can work with us. Yeah, we do have an SMT. So pay attention to how NZD has cleared this high from the 7th of May, 17 o'clock, creating the high of week at that point. But when you shift back to AUDCAD, the 7th of May, 17 o'clock was at this point, that high. So we do have an SMT divergence at the highs, and we could expect price to continue lower. That's an SMT there, a failure to take the highs. So we could see price early on in the week continue lower from this fair value gap or this series of up close candles acting as a bearish order block. So if I wanted to play a one-to-one risk reward sort of situation, I would probably put my stop loss there and target the lows down there, something like that. Of course I know this is upside down, but yeah, something like that. One-to-one, stop loss at the high, TP here, because we are expecting this to be the internal back to external at the highs. So something to pay attention to going into next week. The next exotic pair that I have on my watch list is GBPCAD. GBPCAD is not on the top of my list though because of the consolidative nature that it's been given, but I still support higher prices because we have internal to external. Right now I don't think this SMT is valid, but we will find another SMT in a moment. So we have this fair value gap here. We have the previous range, which is this low, the swing low to the swing high, and obviously prices down traded down into discount, failing to close below this inefficiency, this buy side imbalance, sell side inefficiency, and we still have those relative equal highs there. So I'm expecting internal back to external, and I think this might be reached this week. So this is my view and what I'm looking for on GBPCAD. Of course, with every move comes an SMT, so it would be preferable to find a low that was not taken. For example, this one on the 2nd of May compared to GBPCAD. Let's see if we took it. Yeah, we did take it. SMT there at the lows still, even now. GBPCAD compared to EURAUD, we have a massive SMT divergence at those lows. So we can expect a continuation higher. The same goes with EURAUD. Even though we have swept the relative equal highs that we've been targeting for weeks now, I still see a continuation to the upside being possible. When you switched to the weekly time frame, you would notice that we have created a small fair value gap. Let's remove these. We have created a very small fair value gap that you'll have to zoom in to actually see. I am not sure if price is likely to trade into this, but it's something to pay attention to. If we see EURAUD displacing to the downside and sweeping the previous week's low, we might see a continuation higher from this inefficiency, despite how small it may be. But honestly, looking at it from the daily perspective and measuring the order block, this down close candle, and the reason I call this an order block personally is because it swept liquidity and tapped into a high time frame PDRA. Let me explain what that means. So we do this, measure the body to body. We notice that this other block, this down close candle, came off of this fair value gap. So already this checks off my list of making it a high probability order block. The second thing it did was sweep liquidity, which was sweeping these lows from the previous daily lows and tapping into a series of down close candles as well. So this to me is a unicorn setup where we tapped into a down close candle, created a fair value gap, and now creating an order block on its own, considering this to be a proportion block. So notice how price actually came down to the body of this and held for higher prices, and even now that price has traded lower, it still failed to close below. So this rejection here alone makes me think we might not take the previous week's low, which is technically this low right here, tapping into that higher time frame PDRA, which is the weekly fair value gap. So I expect a continuation from here. To be sure about this, wait for the Monday's candle to print, creating a possible swing low at this point. When that swing low is created, we could see a continuation to the upside, but we don't have a fair value gap, so this is why this is not on the top of my list. Otherwise, we would have had a internal to external range liquidity. So I'm not going to be watching that as much as I would be watching the rest. We do have GBPCAD internal to external, but I would need a stronger displacement and a confirmation on the hourly time frame, because this is a daily PDRA. So I would need an hourly confirmation in order for me to consider taking this higher. By that, I basically mean a closure above this swing high over here, creating a possible breaker, because we have a high, a low, and a new high, and a fair value gap here somewhere, continuation higher. This would be nice when it's coupled with another lower time frame SMT, even though we do have this major one that we just pointed out from the higher time frame. It would be better, it would be nicer to get a market structure shift here, a fair value gap, another SMT probably on Monday or Tuesday, then continue taking price higher from here. So this could be on my top watch as the week progresses. So it will be critical for me to watch the daily time frame. If we somehow maybe create a daily BC here before reaching the highs, I could consider taking it internal to external yet again on top of this one that's already being created right now. The next one I have on my list is Euro AUD. I'm also looking for internal to external range liquidity on this one. So on Euro AUD, we see a possible market maker sell model, not the cleanest one, but it's possible, it's likely. And we might see a continuation to the downside. But despite all that, I will be paying attention specifically to this area. We're not able to trade to the premium the previous week of this range, measuring from the high to the low of the week. Oh, we were actually able to trade. We barely traded to the premium. So here we traded to the premium of the range. We have this up close candle that could now support lower prices as an order block. So I'm expecting internal range liquidity back to external range liquidity. So I'm expecting this sell side liquidity to be tagged next week. We also have this lower fair value gap here to pay attention to that could support lower prices. So daily PDRA, hourly confirmation. On the hourly time frame, we have this SMT over here with we have the SMT, sorry, that's with GBPUSD. Let's open that up quickly. On GBPUSD, actually let's compare using the dates. So we see this high was created on the 3rd of May 8 a.m. while this one was made on the 8th of May 8 a.m. So 3rd and 8th the same time on both charts. And then here the 3rd of May 8 a.m. was that high, and then the 8th of May 8 a.m. was over there. So already we can see the failure to take a new high. We can actually just use that high instead. We created a high of week here on Monday 5 a.m. and we were not able to take a new high since then, while on Euro AUD we were able to take a new high on Wednesday instead of Monday being over there. So this is a clear SMT. We also have a closer SMT right here where price made the high of week. We had this fair value gap that I was paying attention to. We have the relative equal highs above it, these highs right here, but price was not able to trade into it. On GBPCAD, price was able to trade into it, that high that was created on Wednesday. Let's look for it now. It was created on Wednesday 10 a.m. No, not, I'm looking at the wrong chart. Yeah, 10 a.m. Wednesday 8th. So when we go back to GBPAUD, we see that Wednesday 8th was right there. Yeah, this is the equivalent fair value gap. We see that price traded into it. So this to me is another internal SMT where on one asset it was able to trade into it while the other one was not able to trade into it. Even though GBPAUD is showing us that we clearly have a weaker signature in price because Euro AUD was able to take the high while GBP was not able to, and GBPAUD has already taken this sell side liquidity but Euro AUD hasn't. So clearly GBPAUD is the weaker one to trade for sells. Even though that's the case, I'm still looking for a possible selling opportunity in Euro AUD just because the structure is cleaner than GBPAUD, nothing else beyond that. So we could see, as I said, daily internal to external using this daily internal range liquidity, this internal fair value gap to external. So we might just see a continuation without sweeping any liquidity. But if we are going to sweep some sort of liquidity, then let's pay attention to these relative equal highs. When they are, if they are ever swept, we could trade into this inefficiency. I know it's small, but it's there. Into this inefficiency on the hourly time frame. So we could get some sort of AMD accumulation, manipulation into this height, into this PDRA, then distribution to the sell side liquidity. So we could get something like that, or we could just get a rejection lower, find the fair value gap on the hourly, an SMT somewhere the highs, then continuation lower to the sell side liquidity. So that's also something to pay attention to. The reason I say rejection lower, I mean, we could get something like this, imbalance created, SMT somewhere at the highs, then a continuation lower. The reason this is possible is because we are currently inside of that daily fair value gap, the discounted one over here that I'm not highlighting because I don't want a messy chart. So this is what I'm looking for going into next week on Euro AUD. The next one on my watch list, as I mentioned earlier, AUD currently is very strong, especially compared to NZD, and because of that I wanted to trade AUDJPY. This is actually on my top watch for the list for the week. Let's delete these lipsticks and go to the daily chart. So I mean weekly chart. On the weekly time frame, we see that we already have a internal to external range liquidity play happening. I know it's not visible here, but we basically have, let's just imagine there to be a fair value gap here, because every other JPY pair basically has this fair value gap. Let's pan through them on the weekly time frame. We have this fair value gap on CAD JPY, on Euro JPY we don't have the fair value gap, it's an order block there. On GBP JPY we also don't have it. Actually we just have an imbalance because we closed there and opened there, so we have this gap, this I would call it a new week opening gap, but yeah, that's the best way to describe it, a new week opening gap there. The fact that we closed at the high there and opened here instead of opening where we closed off. So we got that on GJ. On NJ, we actually should have the, okay, despite this SMT, we have another block there. On UJ, I believe UJ has the fair value gap as well. UJ does have the fair value gap over there on the weekly. So basically, they all have different things: fair value gaps, other blocks, and immediate rebalances, which is what AJ has, right? So AUDJPY has one of the strongest signature in price, which is that immediate rebalance that I mentioned. When price comes and trades to the top of the previous candle, failing to create a fair value gap, in this case tapping into this last down close candle wick to body as an order block, a bullish order block, so we could expect some sort of internal range liquidity. And no, in this case we don't have a fair value gap, but we do on a lower time frame. So we have this internal range liquidity to external range liquidity on a weekly chart. For a confirmation or a trade idea, we find so on a 4-hour chart. On a 4-hour time frame, we see that price tagged into that on Wednesday. We got our retracement that we're looking for into this BC during the week. We got a push down into that during the week. So now that we've created a significant, we've actually created an order block there with a fair value gap, and this fair value gap was the fair value gap that took out a swing high right there. So that's a market structure shift. So it gave all the confirmation here actually to take price higher, but I didn't see this. I missed this move, but this rejection could be the indication that we need for higher prices, because now when I measure the swing low over there to the swing high that we've created, or if we decide to take it to a significant swing low, we could maybe take it to this one, to the swing high, or we could take it from this one to that swing high. Either way, we notice that the 50% mark of this range from the low to the high is around this area, right? And if this is the case, then if I was to ask what PDRA would be focused on in terms of fair value gaps, which one would you focus on? Personally, I would hope that you'd say this one, because this is the first one that taps into a discounted side of the range. So I'm expecting price to trade lower into this fair value gap over there, then continue higher. But if it does trade lower, deeper past this fair value gap, I don't expect it to go past this down close candle, because this is a high probability order block, and it's also the 50% of the main range from the lowest point the week before and the highest point of the previous week. So I don't expect price to go below this down close candle. This would be my invalidation point, the low of this candle right here. So I want to see price come down into this. Let's delete these other two. I want to see price come down into this discount, then continue higher to that buy side liquidity up there. Of course, we can just play the 4-hour time frame if that's what's needed. Internal to external range liquidity as always, as I've already said. So trend continuation basically to the upside is what I'm expecting to see on AUDJPY. The key thing to remember here is to always buy below the weekly open. So wait for the Sunday opening price. We could see a trade down as a manipulation, probably on Monday, probably on Tuesday, I'm not sure, but we might see a trade down into this inefficiency at any point. Then from there we could see price go higher, but just basically buy below the weekly open. That's all it means. And of course an SMT would be nice, because we have the NZD news coming up this Sunday night at 11 p.m. New York local time. We have NZD data reports coming out, so that could create another significant SMT divergence between AUDJPY and NZDJPY that could give us the SMT we need at the lows for higher prices. Remember, behind every turn from the highs to the lows, we always have an SMT that confirms that turnaround. The next one on my watch list is silver. With silver, I am paying attention to the daily time frame. I know we could start from the weekly, but I don't see it necessary right now. But on the weekly time frame, we have basically the same idea that I've been highlighting. internal back to external. So we got internal range liquidity back to external range liquidity, the buy side liquidity up there, and we have a flat body high which was tagged last week, and the next one will be the swing high. But going down to the daily time frame, we can see bullish order flow. We see prices respecting this BC. We had an SMT at the lows with gold. Let's see if we can split the screen with gold as something we're paying attention to. We have the swing high there. We have this low. Okay, so let's identify the SMT divergence. Firstly, notice how we have this swing low right here on the 5th of April, the same swing low there on the 5th of April with silver. We actually swept those lows while gold failed to do so. It failed to do the same. So this to me was the confirmation that we have for higher prices on a high time frame. We do have multiple confirmation on lower time frames, which we are going to go into now. Of course, I've already mentioned that we have bullish order flow, so I'm expecting internal range liquidity from the daily to external range liquidity. So the bare minimum that I'm expecting silver to reach for is that swing high from the daily perspective. Let's switch down to the hourly time frame and see if we could find an SMT that confirmed the turnaround from here, from the first fair value gap that we created. Remember, we have this SMT at the lows there that confirmed the turnaround, but let's see if we can find one within the week that confirmed that we are likely going to be pushing higher now. I can already spot one over there. Last week I was paying attention to this fair value gap. I wanted to see the low of the week to be formed here, and I was actually specifically paying attention to this series of down close candles here, these two white candles that we have. I wanted to see if price could sweep this liquidity one more time before we continued higher. Of course, we didn't get that, but let's pay attention to that fair value gap. We have this fair value gap here, the BC. Notice when the low was formed, the low of this high candle, was created on Sunday the 5th of May, 10 p.m. I mean 8 p.m. So we have the same fair value gap right there on silver. So in other words, this is the fair value gap that I was expecting silver gold to reach to deeper into, and notice how far we are from reaching into that. So deleting these fair value gaps, we can clearly see that the SMT divergence that was created before the turnaround was right there. The fact that we came down to this, sweeping that swing low, while on silver we were not even able to get close to it. So that's already an SMT for within the week. Of course, we can spot other smaller time frame ones if we wanted to, but this should have been an indication for higher prices. So now when you look at silver, we can see a possible continuation from this daily internal to daily external. Of course, beyond that we have the relative equal highs and etc, etc. But let's zoom out a bit. Let's actually use the 4-hour time frame, even though it's not a weekly PD array. Of course, we do have the weekly one that I highlighted, but I'm paying attention to the daily one. So yeah, so this is it. This is how it looks on the 4-hour. We failed to tap into this fair value gap, while gold was successfully able to do so. On silver, we have these relative equal highs, which you could call part of the initial consolidation of the market maker buy model. So with a possible market maker buy model, and we have those relative equal highs up there that price could go through after sweeping this swing high from the daily internal to external and external range liquidity up there. So if you ask me, where would I be looking for an entry then? I would personally be paying attention to the latest swing that was created, which is here, the failure to tap into the fair value gap, that swing low to the swing high, which is the highest point of the previous week, and we can see that the discount fair value gap is this one over here, the one below the 0.5% or 0.5 and below. we could see price tag into this one, or we could see price remain within this first one, because as we just saw now, silver is much stronger than gold, so we might not get a deep retracement as we do on gold. I don't expect to see price sweep this sell side liquidity, the swing low, otherwise the SMT that we have here would be invalidated. So I'm expecting a move down into discount, then a continuation higher. So let's set our alerts at the discounted price of this range, and yeah, I'm expecting higher prices from here on silver. Okay, so now we have 2 more to go, or should I say 3 more. Let's start with oil, crude, or liquid gold as I call it. On oil, I'm looking at it strictly from the daily perspective, but I think even on a higher time frame you'd be able to see the same structure. Yeah, you'll be able to see the same structure. On the daily time frame, last week, actually going into last week, I was expecting to see us trade into this fair value gap, but I wanted to see a higher push up into the fair value gap, and price just came, given an IO-Fed entry, and then rejected lower. I said I wanted to see higher prices because I wanted to see this high over here swept properly, and of course with me trading CFDs, I was not able to get tagged them because of spreads and everything. So I actually wanted to see this up close candle support lower prices. In other words, that's what I'm trying to say. But that's not out of the picture. That's still possible. My target, or my drawn liquidity, was, firstly, I was looking at this as a possible market maker sell model. By the way, for any turnarounds, we always have an SMT. So we have an SMT here with UK oil. I'm not going to show that in this video because I see we're already 37 minutes in, and I'm trying my best to make this as short as possible. So we have this initial consolidation that I'm expecting price to sweep. So ultimately, longer term, I expect to see that sell side liquidity. But right now, we can target relative equal lows, like those swing lows right there that failed to take each other. So I'm expecting these lows to be the target, or my draw on liquidity, at least for now. And I'm expecting this inefficiency to be the one to take us there. So going to the weekly time frame, we see that we also created a weekly fair value gap. So there is still a likelihood of us taking the previous week's high, which was Friday's high, then a continuation lower. I personally would not be trading this, but it's something to pay attention to going into next week. And actually, let's set our alerts at that point just in case. So of course, weekly would need a 4-hour confirmation if you're looking for lower prices. So if we sweep this and create a displacement or another block of some sort, then we could use that to continue lower on the 4-hour chart. That's my expectations on oil. The next one, which is the second to the last, is Japan 225 or Nikkei 225. For the sake of clarity of where I'm actually expecting price to go to, I'm going to start off with the monthly time frame. On the monthly chart, we've been getting a parabolic move to the upside on Japan 225, and that's because of the lower prices on Japan making the all-time lows over and over again. So measuring from the swing low there, the last swing low, to the swing high, we can see the discounted PDRA, or discounted fair value gap, that I'm paying attention to would be this one. So this is my drawn liquidity. I'm not sure if we'll get an internal to external later on, but at least for now, looking at the monthly time frame, this is where I'm expecting price to draw to. So because of this, I'm going to go down to the daily time frame using time frame alignment, and I am expecting price to draw down to that point. We've traded also to the premium of the latest range, which is technically from here to here, but if you're looking for a significant high, it should be there. And even with that, we've traded to the 50% of it right there on Tuesday, and we could see a continuation lower. But I think the structure might be cleaner on the weekly perspective, which it is. We see the typical 2022 model from the weekly chart, We got a sweeping liquidity at the highs, or a turtle soup. We got a market structure shift when we closed below the swing low. I would have liked to see this low being crossed by a fair value gap. So, but in this case, we still have the fair value gap. So I'm expecting to see this sell side imbalance, buy side inefficiency to support lower prices from the weekly perspective. Since this is a weekly PD array, we would be looking for a 4-hour confirmation. So for on the 4-hour chart, we do sort of have a confirmation already because we tapped into it there. We got a shift in structure there, and prices coming back into it there on Thursday 8 p.m. So price came to this, and now we are trading lower. Personally, what I'm looking for is another 4-hour fair value gap, ideally one that closes below, one that encapsulates a swing low. So I'm going to set an alert here. I would like to see a displacement with a fair value gap in it, a retracement, and then a continuation to the sell side. So I'll be watching this from a 4-hour perspective is basically what I'm trying to say, until we get to the monthly discounted level down there. So that's my draw on liquidity on Nikkei or Japan 225. The next and the last one is the Australian index, which is AUD 200. We will do the same as Japan 225 and start from the monthly perspective. On the monthly chart, we have a discount draw on liquidity. Well, at least for me, measuring from the swing low over there to the swing high. Over there, we have a monthly fair value gap. So this fair value gap is the discounted level that I'm paying attention to, and to be the draw on liquidity. I'm actually expecting this last up close candle to act as an order block of some sort, a change in the state of delivery, and then a continuation lower. Of course, we are only halfway through the monthly candle, so we'll still have about 19 days for this candle to finish forming. We could see a rejection sharply to the downside. It's taking the previous monthly low at that point there. So going down to the daily time frame, I'm basically watching a possible, actually let's start with the weekly, then we work our way down. I'm watching a possible move from premium to discount, but we don't have a fair value gap, but I'm paying careful attention to this for a formation of a fair value gap. On the daily time frame though, we could see a small push to the upside, even though we could see a small push to the upside to this buy side liquidity, even though right now we have this combination of a down close candle. Let's actually just use the body of this instead. We have this down close candle there coupled with a fair value gap, but this fair value gap I don't believe is in discount. Could be, actually it could be barely in discount, measuring from the low to the high. Yeah, it's not in discount yet, so we could see price trade into this discounted fair value gap if we are going to continue higher and not push lower. So something to look out for or pay attention to on AUD or Australian index, AUD 200 or AUS 200. On the hourly time frame, I don't see anything clear, and I will probably give an update during the week, but this is something I'm paying attention to this week. On the 4-hour, we do have a fair value gap. We disrespected this BC to the upside, and now we've created a new one, and it's a fair value gap that actually swept a swing low. So this to me is a high probability fair value gap, even though it does not come from an order block. I would expect to see this hold for lower prices going into next week, coming down at least to the discount of this range, internal to external, on the 4-hour time frame. Of course, using the monthly idea to frame the monthly time frame to frame the idea, going down ultimately to this monthly discounted fair value gap. So that's what I'm looking for, and that's all I have for now. Stay safe, good luck, and good trading.